Long-term care and short-term care insurance. What are the similarities and differences? I'm going to break it down in today's video. Both long-term care and short-term care insurance provide coverage when you need care from an accident, illness, or disability. What are the benefit triggers, or how do you qualify for benefits? Both long-term care and short-term care require you to have either a physical impairment, where you need help with 2 out of the 6 activities of daily living, which are transferring, toileting, bathing, dressing, eating, and continence, or a cognitive impairment like Alzheimer's. Expected need of care. A long-term care policy requires your expected need of care to last at least 90 days, while a short-term policy does not have an expected need of care requirement. Substantial assistance. This refers to a person needing hands-on or standby assistance. Most long-term care policies state you only need to have hands-on or standby assistance and not both. Most short-term care policies don't give you that option of standby assistance, but require hands-on assistance, which is more restrictive. Hands-on assistance is when you need physical assistance without which you would not be able to perform the ADL. Standby assistance means another person needs to be present and within arm's reach of you to provide that physical intervention in order to prevent an injury while you're performing that activity of daily living. Benefit period. No surprise here, long-term care policies are designed to last longer than short-term care policies. Long-term care policy benefit periods can be as little as 2 years and can last up to your whole lifetime, whereas short-term care policies are limited to 1 year of facility care and 1 year of home care. However, there is what's called restoration of benefits, which means if you are on claim and then heal up and don't need benefits for at least 180 days, your benefits will restore to their original amounts, making them available in the future for a different period of care. With an LTC policy, benefit amounts of $1,500 up to $15,000 per month are available. With a short-term care policy, benefit amounts for facility care are available from $10 a day to $300 a day, and for home care, for $150 per week to $1,200 per week. How do they pay benefits? Most LTC policies use a reimbursement method when paying benefits, although there are a few that do offer cash. Short-term care policies pay benefits in cash, so you don't have to submit receipts and get reimbursed. Elimination period, also known as a waiting period. This is the amount of time you must wait to receive benefits once you are benefit eligible and receiving care. Long-term care policies have waiting periods from 0 days to 365 days. Some policies allow you to customize your elimination period, while others are set in stone. Short-term care policies have customizable waiting periods of 0, 20, or 100 days. Underwriting. Long-term care policies are stricter in underwriting compared to short-term care. Long-term care policies will require an application, phone interview, prescription drug check, and depending on what type of policy you're applying with, a medical exam and medical records might be necessary. Short-term care policies require an application, prescription drug check, but a medical exam and records are not needed. LTC policies will take longer to get issued, sometimes months, due to the extra underwriting required. Most short-term care policies get issued in less than a couple of weeks. Added benefits. LTC policies typically have additional benefits that short-term care policies don't. For example, services like care coordination, home modifications, international benefits, return of premium, respite care, caregiver training, and joint policies with a spouse to share benefits. Some short-term care policies do have bed reservation like long-term care policies, but they don't have the other added benefits. Inflation protection. Costs of care continue to rise, and most likely when you buy your policy, you won't use it for years. To combat the rising care costs, LTC policies offer inflation protection from 1 to 5%. But the most common is 3% compound, which means each year your monthly benefit or daily benefit and total bucket of money will grow by that 3% compound rate. Short-term care policies don't offer inflation protection, so many people choose a higher daily or weekly benefit at time of purchase to keep up with those rising care costs. Waiver of premium. Do you have to pay premiums when on claim? Most LTC policies have a waiver of premium, but short-term care policies will require you to continue to make those premium payments when you're on claim. What about price? How much do they cost? It depends on so many factors, but in general, an LTC policy will be more expensive than a short-term care policy. Since LTC policies will last longer and typically have inflation protection, they're going to be pricier. Let's look at an example. Mary is 60 years old, married, and has some health complications. If she applies for traditional LTC insurance with a monthly benefit of $5,000 for 3 years, 3% compound inflation protection, and a 90-day elimination period, her monthly premiums would be $498.22. In 25 years, her monthly benefit will grow to just over $10,000 per month. If she applies for short-term care insurance with a facility daily benefit of $300 per day for 1 year and home care benefit of $1,200 per week for 1 year, a 0-day waiting period, her monthly premium would be $122.64. Since there's no inflation protection option with short-term care insurance, we maxed out her daily and weekly benefit to keep up with that rising cost of care. As you can see, the short-term care insurance is less expensive, but it's for a shorter period of time and benefits don't grow over time. The right fit. Who should consider long-term care and short-term care insurance? If you're healthy enough to qualify for an LTC policy and you can afford the premiums, get it. You'll have more robust coverage, and there typically are additional benefits that you won't get with a short-term care policy, which we've already discussed. If you're not healthy enough to qualify or you don't have the funds to pay for even a modest LTC policy, look into a short-term care policy. Some coverage is better than no coverage. The bottom line, long-term care and short-term care insurance policies provide valuable benefits and have similarities and differences. To see which one is the right fit for you, work with an independent long-term care insurance specialist who has different options available and who is well-versed in all of them. I'm Kelly Augsburger, certified long-term care insurance specialist with Steadfast Insurance. If you have any questions or want to learn more, connect with me online or give me a call, and I'm happy to help.